Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. Fastest 10 minutes. Usually it's about 15 minutes these days, but we'll try and get this back in line. I know you guys over on YouTube are teasing me now, so at least we've got a fun little joke, running joke here. But all right, here we go. 10 minutes, go. Same old. Conversation really hasn't changed about U.S. dollar index. Getting lots of negative talk out of Europe about recessions. Economists are coming out and saying probability is probably pretty high. And of course, if we compare things like the euro, it really shouldn't surprise us that euro continues to look weak. And keep in mind that the euro is 35% of this US dollar index. So if it keeps forging to new lows, then by definition, US dollar index itself is going to stay fairly well bid. As well, too, econs out of the States, fairly light this week. We do have FOMC minutes coming out tomorrow. So we probably want to be cognizant of that. We, of course, have the big annual central banker conference in Jackson Hole, Wyoming. By the way, great skiing in the wintertime there. But they have their late summer conference in Jackson Hole, and that's got everybody's attention, including, if I'm not mistaken, on Friday, Mr. Powell himself is scheduled to have a speech. Everybody's going to be watching. What's he going to say about interest rates? As I said about like yesterday's offering, I don't really expect him to really say too much new about interest rate policy through that, but you never know, he might drop some bombshells, and so we have to, probably the entire market's going to be watching that event with bated breath. It's interesting that just even on the week here, we are trying to forge to new highs. We talked about this last week about how US dollar, if we were going to be hunting a trade location to actually take short shots for sort of like the traders of the world, probably want to be focusing in on these candle body highs here. You can see we've sort of worked our way up into that area, not quite up top there just yet. So we'll see how this goes, and of course we're nowhere near a signal here at all. So, all in all, higher highs and higher lows defines a bull market. Yes, pullbacks. You can see cheeky little gaps that could be filled in down the road. But I don't have any cause to look for any sort of down just yet. We'll see what happens through Jackson Hole. On the flip side of that, and on the site on a daily basis, I'm constantly musing with our peeps. First and foremost, the gold market and the silver market and the gold and silver stocks. I mean, this has been one hell of a bull market. Had you participated in this, you can see just buying the bullion price, you got yourself a nice, 20-30% return. Way to go. And you can see tons and tons of gaps on this gold chart going all the way right down to reload zones gaps on the downside. Silver chart looks a little bit cleaner, but nonetheless gaps corresponding to the gold chart gap. And then gaps down in this area here. I don't know if we have any. Oh, look at that. Oh, I don't know whether this gap's been filled in or not, but nonetheless, you should just look at this chart and go, gee whiz, that's like straight up. For me to get sort of continuation trades, I'd actually like to see this thing, all of these gold, silver, even gold, silver stocks, I'd like to see them at least come back to 38.2s and do some backfilling here to set up the next leg higher. Right now, I got to be sort of jaundiced with this. And when I look at risk on versus risk off in the marketplace, I still think this debate is raging. Risk off assets, yen, gold, bonds, catching a bit of a bid today. And risk on assets, crude, stock market, and now I've included Bitcoin here because I'm starting to see correlation again as Bitcoin as a risk on asset. I think this is still playing itself out. You can definitely see the potential M's coming in on some of the risk off assets. I don't know whether risk on is ready to start rock and rolling here just yet. But in the daily brief, and we'll probably talk about it a little bit more in a bit, but we did have buy signals issued on things like algos on CME Bitcoin futures. We talked lots about things like the Hogue value trade. Have we accepted back into value? And if so, probably should be looking for a test of value high. Where was the S&P chart? I'm very interested in this cycle analysis study. And really, if this cycle is correct, then we should be looking for a market bottom here and looking for risk-on assets to actually rally into sort of middle of September. So we'll keep an eye on that, but long and short of it here, risk off in the form of gold and silver stocks still looking very, very risky to me, which is kind of ironic. Risk off is actually looking risky. Moving on, that's sort of our conversation about the gold. Do I actually have a outright breakdown here? No. We got to wait for it. And if anything, what I've talked about recently is there's a diamond pattern forming up top here on the short-term gold chart, and we'd have to wait for that diamond to resolve itself to tell us what direction things are heading. As I've sort of talked about just there a moment ago as well, what is it? Is it risk on? Is it risk off? On a weekly basis, interestingly enough, risk off is coming down. Risk on is working its way back up. I might argue that the stocks are kind of in not really a buy location right now, not a sell location, kind of just middle of the road. Kind of actually very similar to what we saw on Bitcoin, and we'll see a little bit more. If we look at things like algo signals off of things like S&Ps, we did get an algo signal. It painted a very, very wide double bottom, probably too much risk for a guy like me to just blindly take. Was interesting when we did reload zones off of this. We set up just an absolutely beautiful trade location down in this area, candle body lows, reload zone, bottom of value, and they did just the most beautiful pivot through midweek last week through that zone and worked its way right back up so that the algo signal is actually back in the money again. Go figure. But, like here, coming into the market and buying, I'm not getting any sort of uber indicator signals, and I think actually the trade in stocks was actually the middle of last week through this reload zone. If we look at things like the NASDAQ, tech-heavy stocks, here was that same signal, and you can see we're actually quite far away from that level. So kind of like what I said before, we're probably too late to be buyers, and sort of same logic here. If we did things like reload zones, I think we had a nice little mountain man level tag in there. Candle body lows. I mean, this was just such a sick trade location down here. But as it stands right now, if anything, you can see, risk on, risk off. We said that risk off is catching a bid today. These are risk off. Risk on is pulling back a little bit. So I don't think it should surprise us. Whoops, when I lost the chart again. I don't think it should surprise us that, risk on is looking a little bit heavy. But keep in mind, we're pretty far away from even that last algo signal there. And, you might even argue, if we just do simple trend lines off of those lows, if you did want to get in on this, how ironic, the signal is probably going to come in right back at that original buy level. But algo-wise, big hurry up and do nothing, and we're almost exactly the middle of this range. This is not a good trade location, in my opinion. Moving on. There are some bright spots in the market. We were very fortunate, and this is sort of our TRI-SOF principle. If we were, interested in this name on the long side, we would just simply draw a 50% rule. You can see that sitting 1642 of this entire range. If we start getting market structure signals coming in, then odds are we're probably going to head up into this area, eat a bit of this big old wick, test the original M top breakdown level. So in March, down in here on this little double bottom, we went and bought call options on this guy. It's a nice little reload zone. Beautiful little trade, I gotta say. a good analogy of why I do the TRISOF, because sometimes it takes, a good few months for these things to get going. I love the anecdotal conversations that I'm hearing about this company's speakers for sale at IKEA. People are just basically reporting that they want to go and buy the speakers, but it's sold out everywhere. They just can't buy them. That's exactly what you want to hear as a capitalist. That's music to your ears. So long and short of it here, trade's working really nicely. We bought 3 contracts down here. I'm looking to sell 2 at double our purchase price, get our original money back in our hands, and then get basically a risk-free position on the remaining option. It's a January option, so I've got tons and tons and tons of time. And really, my attitude is I just want to let this thing run here. It was my level was $2.50 on the sell side. It traded at 248 this morning, which is a bit suspicious because options are supposed to trade in nickel increments. So I wonder if the CME boys were having some fun with us this morning. But nonetheless, it looks like the trade's working fairly well, and hopefully I'll report that I got a nice risk-free position going forward on this. So nice trade. Very, very pleased with the results here. Heading on over to crypto now. As we sort of talked about of late, I'm really debating whether we are, we can consider Bitcoin a risk on or a risk off asset. The scuttlebutt I'm hearing is that it is a risk on asset and it's highly correlated with the stock market. And, interestingly enough, people are making the argument it's correlated with crude. I don't know about that, but nonetheless, if we just draw our very simple triangle here, and with the thought that usually these things resolve about 2/3 the apex, so I'm not looking for this triangle to resolve until sort of way over here. This is an interesting battle point. You could maybe even make the argument a small little triangle is trying to form off of this range. Of course, got to get the darn drawing tools to cooperate. Something along those lines. So, maybe that's a right angle triangle, although we don't really have very firm levels to work with. Sorry, I'm wasting everybody's time here. But over the short term, probably best to wait for this triangle to resolve itself here to give us direction. We could very easily blast off through this trend line resistance here. Keep in mind, this is just a potential trend line. It's not been validated yet. But my hunch is, for whatever it's worth, that we sort of play in this window for a little while here. And then into, late September, early October with all our sort of stock market theories and stuff like that, that we actually dump and start, filling out this triangle. We'll see how it goes. Only time will tell. For the time being, basically the conversation that I've been having with site people is, as I said, we did have lower time frame algo signals fire. This was, of course, nice reload zones against all of these ranges, so it really shouldn't surprise anybody. The market found a bid down in here. And as I just sort of mentioned there off of the OK coin chart that we were looking at, 50% levels were tagged. We actually did this really cool GAN study through the daily brief today, and gee whiz, what a coincidence. The rally back to the 50% rule was almost exactly half of the time that it took for the dump. So, I mean, absolutely textbook GAN 101. We're watching volume and volume bars here very closely. Talk lots about this through the daily brief. Don't have any signs of divergence in momentum just yet, but if we do perk up to new highs and, fill in these holes in the profile, do good old Hoag's value trade here, I could see that start to paint divergence off of the 4 hours. We should be cognizant, and of course it makes sense, this 50% level is a profit-taking level. It's not a new trade level. So it should make sense that the market is starting to show signs of overbought. Keep in mind the market can stay overbought for very long periods of time. We call this embedded. So this isn't enough of a reason to justify taking a trade unto itself. But it should be anecdotal evidence that, hey, we're kind of too far away to be a buyer. And my hunch is we're probably still too early to be a seller. If we finish off today's offering with kind of a sanguine note, but we might as well call a spade a spade. This market does still, in my opinion, does not really speak to altcoins. I think things like Litecoin did have their halving event counter trend rallies, which I think was pretty cliche. We had lots of upside objectives hit here, but it almost looks to me, and I'm just going to eyeball this. This certainly isn't scientific, but it almost looks to me like we can actually start thinking about things like heads and shoulders and if that's the case, then that doesn't bode well at all for Litecoin going forward. We also do see that the bulls kind of losing interest here. The last sort of volume spike that we had one here that was 728,000. This one here was 727,000. That's a bad sign. So one high, two highs. It looks like this is a bit lower, yep. So one high, two highs, three highs. If we get a up volume bar below this bar right here, 355,000, then that means that the bulls have fallen asleep, and gee whiz, this up bar here, 237,000. So on a weekly basis, and that was this level here, if this really was a bull, the bulls would have stepped up and said, let's get this thing rocking and rolling. They just didn't show up, and so as a result, following that event, the bears are taking over here now. So all in all, the general message, we've talked about this repeatedly in the past. I think this is probably a good anecdote of sort of the non-Bitcoin core sort of community in crypto. It sure looks to me like we got to come back down and test these lows. So there's your report. Bitcoin's still sideways. Probably wicks and tails need to be eaten. Still consolidating. Altcoins, using Litecoin as our sort of proxy in that space, looking heavy and not done their correction just yet. All right, I think we'll leave it at that. Somebody's telling me it's 17 minutes today. Way to go, Brian. Completely destroying my 10-minute target. But all the best, everybody, and bye for now.